Assalamualaikum. Today our group will present on our assignment, which the company that have been given to us is Boustead Heavy Industries Corporation Berhad. Before we proceed with our presentation, I would like to introduce myself and my group members. My name is Syaidathul Rashidah Binti Aminul, and my group member are Muhammad Zaffarin bin Muhammad Masri, Valentina Alfira Anak Linang, and Shafiqa Binti Halimi. Now, I will start with my part, which is financial ratio. We are required to give comments on the financial ratio that have been calculated. Let us start with the first one. The first one is ability to meet maturing obligations. It consists of current ratio, asset test ratio, average collection period, and days sales in inventory. Current ratio. We can calculate current ratio by current asset divided by current liabilities. Current ratio is a liquidity ratio that is used to measure the ability of the company to pay their short-term obligations by using their assets. In general, a company with a current ratio of 1.0 times indicates that the company have their assets and they are able to pay their liabilities. If the current ratio is higher than 1.0, this shows that the company is doing well. From the above, we can see that in the year of 2017, it is the highest current ratio as compared to 2019, 18, 2016, and 2020. At the early stage, the current ratio is 1.04 times, and then it is increased to 1.09 times in 2017. After that, it slightly decreases from 1.09 times in 2017 to 0.91 times in 2018. The decrease in current ratio is a sign that the company are facing difficulty in solving their liabilities. In 2020, the current ratio keeps on decrease to 0.97 times. It means that this company is having or facing problem due to the increase in their liabilities. Next, asset test ratio. The formula for asset test ratio is current asset minus inventory divided with current liabilities. Asset test ratio is an indicator to make sure that the company has sufficient current assets to pay its short-term debts. The current asset can immediately cover the current debt. Based on the table above, which is the Boustead Heavy Industry Corporation Berhad, it shows that asset test ratio for this company is the highest in 2017, which is 1.05 times, as compared to year 2016, 18, 19, and 20. The ratio keeps on decreasing. When the ratio keeps on decreasing, it shows that the company is not efficient in paying their liabilities within short period of time. Next, average collection period. The formula for average collection period is average account receivable divided with sales over 360. Average collection period is to know the number of days taken for a company or a firm to collect its account receivable from their creditor. The shortest days for this company is 256 days. For them to collect their account receivable is in 2016. The days keep on increasing from 2017 to 2020. When the number of days is increased, this shows that they are having difficulties to collect the debt from the creditor. Last but not least, days sales in inventory. The formula for days sales in inventory is average inventory divided with cost of goods sold over 360. Days sales in inventory is defined as the average days that the company needs to turn their inventories into sales. The days sales in inventory for 2016 is 74 days, and it keeps on decreasing until 2020. The lower days sales in inventory is better because it expresses a shorter period to clear off the company's inventories.
Assalamualaikum and hi. So today I will present on effectiveness in managing asset and efficiency in handling operation. According to the table above, the ratio will continue to decrease from 2016 to 2020. The higher the number, the more efficient the company is at collecting its account receivable. Aside from that, their organization has no problem dealing with its customer. As a result, the highest ratio is 1.40 times in 2016 and the lowest one is in 2020. It's possible that this happened because the company collecting mechanism is not up to par. Then, there's inventory turnover. It is to determine how successfully a company inventory is handled. According to the table above, the ratio is 4.84 times in 2016 and increased to 16.08 times, 17.68 times, and 28.3 times in 2017, 2017, 18, and 19. After that, there's fixed asset turnover. It used to see how well a corporation uses fixed asset to generate revenue. The greater ratio indicates that fixed assets are being more effectively to create returns. The ITO continued to rise from 0.89 times in 2016 and to 0.92 times in 2020. Last but not least, total asset turnover. It is used to determine how well a company generates sales from its overall asset. A rising total asset turnover is a positive indicator for both the company and the investor. The greatest total asset turnover was 0.77 times in 2017, while the lowest was 0.32 times in 2019. These demonstrate that this organization is attempting to improve how they generate sales from the overall asset, as the ratio does not appear to be declining significantly. Thank you. Next part, I will explain the profitability and overall operating result. The gross profit margin here is a measure of a company's sales performance based on the efficiency of its manufacturing process. A smaller percentage is indicate that company product is not produced efficiently. The maximum percentage is 52% in 2016 and it's gradually decreased until 2020. This indicates that this company has a low sales volume which may result in a poor gross profit margin. Secondly is operating profit margin. According to the table above, the percentage of operating profit decreased from 33% to 11% between 2016 and 2017. It indicates a decrease in percentage from 2018 to 2020. This could occur as a result of the increased cost of item supply as a result of the supply rising the price of raw material. Third is the net profit margin. The percentage reduction from 2016 to 2020, as shown in the table above, indicates that the cooperation is losing money due to its poor pricing approach. Fourth, return on asset from 2016 to 2020. The number continued decrease, as shown in the table above. The greatest percentage is 14% in 2016 and it decreased from 2017 to 2020. And finally, there's the return on equity. The rate of return that shareholder of a company common stock receive on their investment is referred to as a return on equity. In 2016, the return on equity was 26%, which is the greatest amount of the percentage ever. The proportion decrease as has a negative value from 2017 to 2020. This is due to the fact that the company may not be earning a satisfactory return on investment. And that's all.
Now I will present a statement of cash flow of Boustead Heavy Industry Corporation Berhad analysis from the year 2016 until 2020. In the table given, you can see that the cash flow statement has three parts, including net cash from operating activities, investing activities, and the financing activities. In net cash from operating activities, it shows a negative trend in 2016, 2018, 2019, and 2020, except for 2017. This is where Boustead company gained a positive value in that year. Besides, the company gained a positive value in the year 2016, 2019, and 2020 from investing activity, while the company experienced negative values in 2017 and 2018. Lastly is net cash from financing activities. The company reported negative value from 2016, 2017, and 2020. Meanwhile, in 2018 and 2019, the company managed to maintain the loss of the value in its financing activities. Next, I will elaborate more on the cash flow analysis from year to year. Under operating activity in 2016, the cash flow recorded a negative value of 686. This is due to a large amount of cash payment with 232,749 for the company to pay off their debts. For example, to pay to their suppliers, banks, or employees. The company also received a cash inflow from the cash received from debtors, but still cannot cover the losses of operating expenses. Besides, the Boustead company achieved a positive values of 73,335 from its investing activities. The gain is mainly attributed to gains on other investment and the sale of fixed assets. This contributes to the positive cash flow in the company. For the financing activities, the company has insured retirement debt with 101,963, which contributes a negative value in cash flow statement. Not only that, but the company also issued long-term debt which affected the negative value of cash outflow in financing activities. And now let's move on to the year 2017. For operating activity, the cash flow recorded a positive value of 53,367 compared to the previous year. The cash received also dropped from 256,256 in 2016 to 253,304 in 2017. However, these changes does not affect the operating activities to be a negative values. Besides, under investing activities in 2017, Boustead Heavy Industry Corporation Berhad received a negative value compared to the previous years. This situation happened because of the lower of the cash inflow from other investing items, and the company is purchasing another new fixed asset in 2017. Lastly, Boustead company still does not make any improvement in financing activities, where it is still achieve a negative value in 2017. In addition to that, the company pay a dividends to their shareholders, and other factors also lead to the negative cash flow in that year.
So now I will explain the remaining 3 years, which are 2018, 19, and 20. So as you can see in the operating activities, all of the remaining 3 years have negative value, which are 52,667 ringgit, 19,728 ringgit, and 70,661 ringgit respectively. So these 3 years have negative value due to the high cash payment. It seems that they can't lower down the cash payment. For the investment activities in 2018, they had a negative value of 9,838 ringgit. It seems that the investment return to the company might be a bit difficult in 2018. Meanwhile, the remaining 2 years have positive value, which are 2,605 ringgit and 3,753 ringgit respectively. So this is due to the company receiving cash inflow from other investing cash flow item, which resulted in the positive value in investing activities. So for financing activities in 2018 and 2019, they had a positive value, which are 36,860 ringgit and 27,589 ringgit respectively. So this is due to the insurance retirement of debts and long-term debts, which both resulted in positive value. Meanwhile, in 2020, they had a negative value, which are 10,903. This is also due to the long-term debt reduction, which resulted in negative value. So to conclude, this company fails to maintain the positive cash flow and continues to drop to a negative value in 2020. So that's all from us. Thank you.